Today is a big day. The CNBC-TV18 poll showed that the market today is not expecting a rate hike or a change in stance when it comes to the RBI policy. Then what is it that we should watch out for? Latha is here with the editor's take. Latha, from a market standpoint, is there anything that can move the needle?
Well, in the first place, the market is so completely on the side of no action policy. It is not just that they have voted by a majority. Unanimously, our poll said no action. The Citizens MPC, which we conduct, also said no action, no change in the stance largely. But the market is still worrying. How will Reserve Bank indicate that they are worried about the global ambience? See, the MPC is set, the repo rate is set on domestic factors. But there is an ambience of high rates. And when the dollar rates and the rupee rate narrows too much, there are people who will prefer the dollar because it's a risk-free return of 5%. So the rupee rate has to be much more for it to remain attractive. And therefore, will they do something to push up the near-term rates, keep the call rates higher? So there are all kinds of guesses. And let me warn you, these are just guesses. Will they raise the repo rate by 10 basis so that it is effective but not material? Will they do some diluted kind of CRR like they did the ICRR in the previous one? Or will they just raise risk weights on, say, luxury home loans? Let me repeat, all this is just dealer thinking aloud, no source-based info here. They're just wondering how will RBI communicate. But my sense is it's quite possible RBI will simply communicate with its words. They're very good at using the appropriate language, and they may just stick to effective communication to say that this far, no change, but expect anything, anytime if the circumstance. It's quite possible they'll just do that. And the big thing to watch will be the FY25 inflation forecast. You will get for all the 4 quarters. At the moment, we're only for 1 quarter, April, May, June. We will get the remaining 3 quarters. And if that is nowhere near that 4.5% mark on an average, then the market will push back rate cut expectations. If the average is closer to 4.5 or even lower than 4.5, then the market will start expecting that sometime next year, mid next year, there'll be rate cuts. So that would be an important point to watch. And finally, you have to watch out, of course, for the Q&A, because anything can come up in the Q&A. Remember, for the first time, a fintech has got a banking license. Of course, it's indirect. They've been allowed to take over, Slice has been allowed to take over the Northeastern Small Finance Bank. But, there can be questions like that. Credit cards, fintechs, you name it. So that's going to be interesting. And, for banks, it's material.
Absolutely. Latha, thank you very much for that editor's take. So, all that you need to know on the RBI monetary policy before and after. So stay tuned right here on CNBC TV18 for, extensive coverage, which we will continue to get to you. We'll take